Hey all, Tom Weller here from forexreviews.info. I'm going to reveal to you just a really simple tip in Forex, or you can use in any market actually, and on how to identify trend changes. The importance, first of all, let me just go over what's the importance of getting in on a trend. Well, the importance of getting on a trend is basically the most profitable way of trading. When you're trading, you want to know which direction the market is going in, so you can get in at the optimal time. And so by trending, that allows you to make profit. In a market that's just sort of moving up and down the same spot, it can be very difficult to make profit. And so this little tip I'm going to share with you right now, it's just going to take a couple of minutes. It's going to blow your mind. This is actually one of the top secrets to trading. So hopefully I'm not going to get, I tend to get a bit of flack on some of these videos lately because I reveal some really powerful tips that a lot of people, they don't want people to know about it. But I'm going to give it to you guys for free. Thanks for subscribing, and yeah, jump over to my blog at forexreviews.info when you got a bit of time. Okay, so let me just get into this. This is really, really simple, guys. Okay, whenever a new trend forms in Forex, you don't have to jump to an indicator or anything like that. There's a real simple way of knowing when a trend is changing. And that's by just jumping over to the weekly charts. The weekly charts are really, really powerful for this. Basically put, you're looking for weekly engulfing candles. Whenever a new trend changes, you'll always get a week where the bears have more controls than the bulls, or you'll always get a week where the bulls have more control than the bears. And so there is a filter to this as well. In an uptrend, okay, if you're getting a trend change, you want to have at least 3 or 4 candles, okay? In a downtrend, before you get an opposing candle, you want to have at least 3 or 4 candles, or even more candles, the better, okay? So you're looking for a change. And so let's have a look at this for a second, okay? This is the Euro US market. And I use this a lot, by the way, guys, for getting in on trends. And in the next video from here, so make sure you subscribe. Next video from here, I'm going to show you how you can trade this, right? And be able to get in on really good entries where the market's not going to go against you much at all. It's a really simple little strategy you can use. It's based on price action, of course, like all my strategies. And it's based on engulfing patterns as well. But it's basically where to enter the market once a weekly engulfing gives you a signal. So let's go over this and let me just show you this. Okay, so first of all, let's just look at the Euro US. Let me just take it so I can move back a little bit so we can look back at all these different signals I've got drawn on the chart. So let me just finish up here. I was just drawing these, okay? And now you can do this on any chart. It works on any chart, commodities, stocks, you name it. This is one of the best ways of getting in on a trend right at the beginning and knowing that you're getting in on the trend. If you're waiting for like indicators to line up like 50 EMAs, 20 EMAs, you're going to be getting in way too late, guys. Actually, as an example, let me just show you that. This is the weekly chart. I'll add the 50 EMA, which is what a lot of traders use for getting into a trade. Okay, let's just do that to begin with. Okay. And commonly what they do is they sell when it's below the 50 EMA and they buy when it's above. See, this would mean that all below here they saw it as bearish, okay, and only when it got above here that they saw it as bullish. Okay, so this is me missing out on all these different opportunities and all these different trends. In fact, the only trend that it sort of seemed to pick up was this one here. Picked up this trade well, and it picked up this trade well. Oh, and this one. But all the other trades, it sort of was in between. So let's get rid of it. It's no good, okay? So let's get rid of the 50 MAs. Let's get rid of all the indicators altogether. If you want to use an indicator for confluence, that's fine. You can do stuff like this. Let me just show you quickly. So let's say you want to use a stochastic. Say you're a stochastic person. Okay, just use the average one that they've got in provided. What you can do is you can go, okay, well, see, if you use a stochastic, you're only going to be taking these signals here like this. Or this one didn't even line up. So this one here. And if you want to use an extra thing for confluence, that's fine, right? You can do that. You're going to be missing out on some opportunities. But some people prefer to have the double confluences before they enter a trade. And I understand that. That's completely fine. So these are all the trades that you could have taken with double confluences. And I mean, if you're looking at a number of different pairs, there's still going to be plenty of trading opportunities if you use the stochastic and the engulfings as well. So let me get rid of these now. Okay, and let me just show you how it's traded without any indicators whatsoever, just with price action. All right, we'll delete that. So what we're basically looking at is this. Okay, we got a move up here. There was a movement up. Beautiful movement up. It had a movement down, then a movement up. Okay, and then we got an engulfing candle, a bearish engulfing candle. Then the market moved down. In fact, let's have a look at this. This is the Euro US, by the way. It's a very common pair, and I wanted to use a common pair because, you know, a lot of people like to trade this. So if you took it down to this candle here, like which is another entry, you see it went down over 1,000 pips, 1,158 pips. But if you got out here, you would have gotten 872 pips. Okay, from here, you could have bought again. Okay, now the market did the market go up from here? Yes, it did. So the market went up to here. If you got out here though, and you waited for the candles to give you confirmation, you would have gotten around 245 pips. And say from here, this bearish engulfing, did the market go down? Yes, it did. So the market went down. And there was a number of different signals. I mean, there was this signal as well. The market went down before you got a signal to get out. And like I said, you need a filter. Okay, let me write this one down. Of at least 3 to 4 candles minimum. Okay? Okay, that is a rule in trading, okay? You're not going to go boom, boom, buy. Boom, boom, buy. And that doesn't work. You want to have about 3 or 4 candles in one direction and then an opposing signal, okay? So, as an example, these aren't engulfings, this isn't engulfing, so you're still selling here. So it tells you to stay on. You stay on, stay on. This is an engulfing. It's bigger than the previous candle. See this, guys? So, did the market go up after this? Okay, so for starters, if you were following these rules, you would have had 1, 2, 3 successful trades. Then if you saw this other engulfing here. Now, see, this is not a trade. The reason being, remember, the 3 or 4 candle rule. 1, 2, 1, 2. It's not 3 or 4, so ignore these candles. You need a movement. Now, if you want to use an extra filter, an even extra filter, what you can do is you can put on an indicator which is called a Bollinger Band, and you just leave it on its standard settings. And what you do is you just sell above the middle line and you just buy below the middle below. So these would be okay. And see, you wouldn't take this trade, but you'd take this one, you'd take this one. So basically the only trade that you wouldn't take is this one, if you had the Bollinger Bands. And so the Bollinger Bands gives that ability of an extra bit of confluence for those traders that need a little bit of confluence, if you want to use an indicator. But you do not base your trade off the Bollinger Bands. You base it off the candles. This is price action, right? Confluence just means it's just an extra little signal that says, hey, you've got to have all the Bollinger Bands traders trading with you. So you're looking at that. Okay, so now if you want to use that, you can use that. Okay, and Bollinger Bands gives really good results on the weekly charts, if you're wondering, or the daily charts. They work really well. And occasionally I'll look at them for extra confluence. Like I said, I like to have at least 3 confluences. The number one I want to have is price action. I want to have engulfings. And I want to have something else lining up. Fibonacci, maybe a Bollinger Band, maybe a moving average. It depends. Depends on what I'm looking at. But they're the minor confluences. Always price action and structures are the major 2. Okay? Okay. And engulfings, of course. Okay, so here we go. Alright, so without any indicators again. So we got it. Okay, so we had no engulfing. That's not engulfing. It's not bigger than the previous. We did get one bigger than the previous. See this one here? And so you could have sold there. And it did sell off. So we can put an arrow there. Okay? Now, see, we wouldn't take this sell. Why wouldn't we take this sell? You remember the rule. 3 or 4 candles. Let me pull this down. 3 or 4 candles minimum. It has to move before you get an opposing signal. You can't just say it's a trend change because it's only moved 1 or 2 candles. So it's not a trend change. Okay, so this is the filter for this system, right? And this is not really a system. This is how the big traders trade, really. Okay, so And see, look, we got 1, 2, 3, and then a candle here. So here we got some false signals here. Okay, so, but if you were using, like I said, like the Bollinger Bands or an extra bit of confluence, you wouldn't have taken these signals. But if you did, you would have been, let's have a look at this for a second. If you sold here, the market still went like 50 pips in your favor, so you probably stopped out on that one, and the market went 67 pips in your favor before you stopped out on that. And you're gonna get wrong signals, okay? But most of the time it's gonna be correct. And if you follow the system of 3 or 4 candles, 4 being even better, if you follow that, you'll find that you're right most of the time. Now, if we look at this for a second, let me just chuck in this as well, like the extra confluences with Bollinger Bands. So you wouldn't have taken, oh yes, you would have taken this signal, but you wouldn't have taken this one, yeah? Okay? Oh, actually, you would have. You would have. See, it wouldn't have made a difference. So basically, yeah, basically in a nutshell, is the majority of the time you're going to be right, but sometimes you are going to be wrong. But as you can see, this one still went like nearly 80 pips in your favor, and this one went like nearly 50 pips in your favor. Okay? So here's another example, right? With another bearish engulfing. And this is what I call a classic, a beautiful, really good classic bearish engulfing, right? So this one worked out, and it went all the way down, okay? And we did get one engulfing here, and it did fit the protocol, so you could have bought here. But what's the second rule? Let me write it down. Buy above or on retrace into buy area. Okay, and I'll explain that in my future video on how to trade these. Okay, so you're either buying above the candle or you're buying on a retrace. And as you can see, this is a very interesting candle. All right, so this is my rules. I'll just put these up here. Okay, this is a very interesting candle. It actually dropped just straight down. So it's probably a news event that just pushed it down. Okay, and if you get a good signal, it will usually go in the direction of that signal afterwards. And so here's a couple of false signals. But you know, buying on the retrace, yeah, you would have had a couple of bad trades in here, guys. Okay, so here we go. This one is an example. But as I said before earlier, if you look to the left with this one, you've got a big bearish engulfing. So it's best not to trade it. If you can see the bearish engulfing, you should not trade it. This one, you can't really see anything. So you could see that something was about to change, but there was nothing to really compare it to. Whereas this one here, it had a smaller bearish candle. So this is the more qualified candle. And if we line up another confluence, right? Okay, it lines up perfectly with the bottom of the Bollinger Band. So that's a great buy. Okay, so we get rid of that. And we know that if you're trading Bollinger Bands, you know that, well, the rules of Bollinger Bands is usually aim for the middle of the Bollinger Band area for taking profit, or you aim for the end. Okay, so either or. But, you know, this isn't this is like, you know, you're looking for reasons to trade. Okay, so now you got this weekly candle, right? Okay, so you want to wait for every retrace on the lower times, and I'll show that in the next video, a retrace on the lower time frames in order to get better entries and to be able to keep trading and make as much profit as possible as it's going up. So this gives the signal to only take buys. And see, the market went up from here over 180 pips, basically 200 pips. So it worked out well. And we did get a sell candle here, which went down one candle, so you could have put an arrow there. But the thing is, why wouldn't you take this trade? Well, you didn't get 3 candles up, did you? So it didn't work. Now, here's a perfect signal. And this is what I call the perfect signal to price action, right? You had 1, 2, 3, 4, 4, right? Perfect candles going up. And then you had one bearish engulfing that took over. This means, guys, that this whole week is taken over. So this is the beginning. So once this candle closes, this is the beginning of a trend. This is the beginning of a downtrend. This is the beginning of an uptrend. This is the beginning of an uptrend. This is the beginning of a downtrend. This is the beginning of an uptrend. And it repeats itself over and over. So you're looking for these engulfing setups on the weekly chart. The weekly chart is gold for this. Now I'm going to quickly look over at another pair and we'll just compare the differences. Now it works on every single chart, guys. You can go over it. You'll find that the weekly chart engulfing signals, there's not many that are wrong. It has a success ratio of just over 80%, around 85% whenever I do the back testing of it. But I know it's definitely over 80%. But you guys want to do some back testing and check it out yourself. It works really well. Okay, so let me go over to the Euro AD and let me just show you this in a nutshell. I just drew these in just before. Okay, so here we go. So we're looking for significant candles, right? We had a movement down. Okay, we got a sell signal, 4 candles, sell signal, movement down. Okay, movement across here. We didn't get any engulfing signals until here. And then we had a movement up. Pretty simple, yeah? Okay, then we had an engulfing signal and we got a movement down. Now, how far are these moves that we're talking about? And if you look this as well, another confluence, previous structure, support. Now, resistance. Okay, we've obviously got a support here, and we've obviously got a support here. And the weekly shows the strong supports, and you really should be you should be really paying attention to the weekly support zones in the Forex market, or any type of market. They're very strong. Okay, so we got this move here. Let's have a look. Until it told you to get out. Where did it tell you to get out? About here. That's 970 pips, guys, from where it told you to start being, where it told you that there was a bear trend forming. Okay. From here, we had a bull trend. Okay, was there any candles in here telling us to get out? No, there wasn't. This candle didn't even tell us to get out. Right, and we could have held on a little bit longer. We could have held on all the way down to here. That's up to you. If you want to get on the first bearish candle, you can. Or you can hold out until, this is another system you can use. You just keep putting your stops below the weekly candle until eventually the weekly candle is broken. And that's a very simple strategy to abide by. As an example, you know, this was the last weekly candle here, and it got broken on this bullish engulfing. Because usually when it gets broken is when there's the next trade. And as an example, we got a bearish candle here. As you can see, we've got the 3, then a bearish candle, then 3, then a bearish candle. So sometimes you get these false signals. And so it's often better to wait for a 4 candle run or a 3, you know, like you do the back testing, you do the deciding. If you're happy to lose a couple of trades, focusing on the trend, then yeah, you can do it however you want. This is the way I trade it. And this is the way it works for me. 3 or 4 candles in one direction, and then I'll look for an opposing signal. And if one comes up, occasionally getting some false signals. Like this was a false signal, but let me give you an example here, guys. False signal, but the market still went down 133 pips. Okay, so you know you're putting your stop, but the market's still in a. You should be at break even by then. Okay, so you would have been break even. Now this one would have been a loss, but you know a small loss. It's not a big deal, not a big candle. Okay, so here we go. We had a market movement down, and then the market moved up. Now, if you want to use 4 candles in between, you'll get less signals, but you'll get better signals. Okay, as you see, you wouldn't have taken these candles here. And also, if you want to use the Bollingers again, or a moving average, let's have a look at the Bollingers with this one as confluence. Okay, so that wasn't so bad. None of them were bad. This one was a better one. This one was a bit too close to the middle. Perfect for the Bollinger. And yeah, perfect for the Bollinger because it broke down to lower. Okay, so you wouldn't have taken that trade, probably this one here on the Bollinger. You would have taken this one. It would have been beautiful. Okay, so let's get rid of the Bollinger now as an extra confluence. So anyway, yeah, if you want to take like just over 4 candles, you can do that as well. But as you can see, this is the beginning of a trend. The market went up. Now let's have a look at this. Do we get any signals to get out? Yes, we got a signal right here to get out. It was a false signal, but the market did go down, interestingly enough. And let's have a look at this. So up to there, we had 1,640. So that's a lot of pips, right? Okay. So if you bought on a retrace here, you could have gotten over 1,600 pips. Okay, so if you sold here, with this engulfing, which is engulfing of this candle. It's not engulfing this previous candle. So that's where you got to be a little bit cautious. If you just wanted to be engulfing of the whole previous candles you can see, you wouldn't have taken this trade. But let's say you did. That market still went down over 270 pips from that candle. And, and the market kept going higher after that. And so that's basically it, guys. I'm not going to talk too much about it. This is how you can identify trend changes as they happen, as quickly as they happen. It works really well on the weekly. One way of looking at it is for a whole week. The previous week it was bullish or bearish, and then that next week it was extremely the opposite way. And for a whole week the market was going in that one direction, whether it was a sell-off or a buy-up. And what tends to happen is after these week worth of bullishness or week worth of bearishness after a previous trend move, that tends to change the trend. And so that's why these things work all time and time again. And so that's what, if you're looking for as early as possible getting into a trend, this is what you want to be looking for. I hope you enjoyed this video, guys, and feel free to leave your comments. Come and visit my blog, subscribe. It doesn't cost anything, guys. Just add your name and email. You get more videos like this on how to trade, Forex tips, etc., etc. Add your comments below. Like this video before you leave. Please do not leave without liking this video. Okay. Have a good rest of the day, guys. Okay. Bye for now.